Well, let's bring in another guest host for this morning, Craig Russell, Chief Market Strategist, China at Saxo Bank. He joins us now live on the set. And, of course, staying with us is Ron Ianieri, Chief Options Strategist at the Options University. Gentlemen, thank you very much for your time. Welcome to the show, Craig. I'm just looking at a little 30-day chart here for the Dow Jones Industrial Average, and it really seems like it's a couple of days forward, a couple of days back, a couple of days forward, a couple of days back. It almost seems like the market just doesn't know what it wants to do right now.
Or is this a trader's market?
Well, if you're a day trader, it's a day trader's market. But clearly there's a lot of problems in the marketplace. I mean, I've personally felt problems, especially in my long-term portfolio with financials. I had some very scary days there with some of the banks, and I still don't think we're out of the woods yet. And the market's clearly reflecting the insecurity.
You're still holding financials?
At this point, I have to.
Okay.
At this point, I've made a commitment to hold the banks that I own. And
Which ones? Which ones? Can you disclose?
Well, I don't want to. Well, I'll just say one that let's just say my family has a large holding, and it's U.S. Bank shares. Yeah. We saw a move in 1 week from 30 down to 20, and then back up over a 2-week period, back close to 30, and we're probably at around $30 right now. It's led to a lot of sleepless nights.
What about you, Ron? How are you playing the financials right now?
Well, we had been short them for a while, and you know, we firmly believe that this latest bounce up in the financials have given an opportunity for selling again. Although it's getting tougher to sell these things because, you know, the government is making it very hard to short any of the financials. And that's why I'm really nervous about the industry. The fact of the matter is that if the government has to go this far just to get these things propped up a little bit, then, you know, there's more downside to come in these things, and I think it's quite obvious. You know, the government's trying to do everything it can to protect them, not only the company, the banks themselves, but the bank's shares. And, you know, you can't manipulate this thing forever. Eventually, reality has to set in. These financials have to get flushed. We've got to get all the problems out. We've got to have the type of selling that we need to see where, you know, these things get hit hard. We see the VIX respond with a good jump, say into the upper 30s, possibly even the low 40s.
Yeah.
And we really need to see a capitulation here, and we're not seeing it because the government is stalling it. And the longer that they keep stalling it, then the worse this is going to get. Just let it happen. We know what's supposed to happen.
Yeah.
Get your hands off and let it happen. You know?
Yeah, fair enough. I mean, you make a good point there. I mean, the VIX there on your screen right now, just over 21.5. You need to see levels at about 30 to say, you know, a red alert crisis, we're at stage 3, whatever, DEFCON 3, etc. But I mean, the fact is, Craig, we're not seeing conviction in markets right now. I mean, trade volumes are actually are thin-ish.
You have to. I agree with everything he just said. We need to see creative destruction in the marketplace. At some point, the government's just got to let what's going to happen happen. And the reality is, these banks are not sound. There's been a lot of mistakes made by executives that are still in power at banks. Let the market clear itself out. One of the advantages of U.S. markets was that we always had creative destruction. We fixed things quickly. We compared ourselves versus Japan in the 90s and said that won't be what happens to the U.S. Instead, we're choosing a policy to go down that same path where we're delaying, we're stalling, and we're not allowing reality to take its course. I absolutely agree with him.
Government intervention. Yeah, Ron, come in here.
Yeah, Craig, and I definitely see eye to eye with you along those lines. The longer something looks bad and the more pessimistic the outlook becomes because it's a lingering situation. Knowing this, and you're being someone that's holding bank shares right now, what are you doing to protect yourself knowing that you're probably going to see some type of major sell-off again before we see the rebound? You want to have room to buy a little lower, to buy a little more to average. What are you doing to protect your shares now?
Well, in reality, I'm not doing anything in the options market against that. I'm actually, you know, this is truth. This is hope at this point. I've been in these shares for a number of years, and I'm not going to get out of these shares. There's still U.S. Bank.
You're going to ride and bet on a recovery long term?
I'm not riding and betting on a recovery. I'm looking for 10 years down the road.
Okay.
I'm not. But if I were to be a more tactical trader, I would be selling into the level I see in my own shares right now. We saw a substantial bounce. U.S. Bank shares above $30 has a tendency to sell off. We saw it as low as 20 when earnings came out. But there's still going to be more negative news in banks, and I would look at selling into rallies, but again, the government's limited that. But you can still express this through indices. You can still trade indexes. The government may be able to stop individual shares, but indexes are still going to affect the market, and the futures still provide an opportunity to go short this marketplace.
Okay, hold some of those thoughts. We'll get back to you in just a second, and of course we'll also get back to Ron Ianieri, Chief Options Strategist at the Options University.